Welcome to What's in Store with Carly and Chris, the show where we cover hot topics at the cross section of retail and real estate. I'm Carly Iacono, and I'm joined by my co-host, Chris Ressa. Chris, how are you today?
I'm doing great. How are you?
Good. Nice to see you on Hollywood Squares. Good to meet in person, but it's kind of fun.
Yes.
Top Square for the win.
Yes.
We are talking about really the golden child in retail real estate. It's hard to come up with negatives. We're going to try to come up with a few, and that would be grocery real estate. It's everyone's favorite, major traffic driver, and a great expansion story. But we figured it was time to just kind of step back for a minute and see where 2025 brought us and what we're expecting for 26. You ready?
I'm ready.
All right, let's take a look back before we go forward at 26. We have this ongoing theme of online grocery delivery taking over and people going to fast food and restaurants and spend shifting. I don't think that was really the case. Lay the scene for us.
Yeah, I think, 2025, the grocery sector, faced a lot of challenges with food inflation and uncertainty, and grocers executed really well. Sales were up at a higher than inflation, albeit small, but still higher than inflation in a pretty tough sector. We had a lot of new to market entrants in certain markets from a grocery perspective. And I think grocers reinvested significant capital into their stores. And, while online sales grew, I think we're reaching a plateau for online and grocery because you're starting to see a divide even in the affluent households where the cost for delivery is just more than going to the store. And I think people like value, and while they love convenience, I think that for the majority, convenience is a luxury that often will over time lose to value.
And there's an element that's unique to grocery where you want to go pick out your own produce, right? You want your avocados to be just right, and you want to pick the cut of meat that you want and look and pick your own items that I think you don't see a lot in other sectors. So there's a certain stickiness to the shopping model because of that as well.
Yeah, I mean, there's often times that you get people get a grocery delivery, and the shrink is already high in a grocery store, but when you have to get refunded for the avocados or the wrong oranges, that reverse logistics is tough. Or oftentimes they just refund you. You don't even have to return the item. It's like the honor system.
Right. I've had that happen actually because it doesn't make sense for them to take it back. There's no way to process it, keep it fresh, and resell it. So it's cheaper to not even go through the motions.
To just give it to you. But in such a
Yeah.
low margin business,
That's
that's
tough.
tough.
That's tough. Agreed.
Like,
One thing I thought was really interesting from 25 was sales grew. Fine. That happened for a lot of sectors, but sales outpaced inflation. So consumer spending is going towards grocery above and beyond just higher cost items. They're actually spending more in grocery stores. So I thought that was worth noting, right? It's not just
yeah,
our
for
bills are
sure.
higher, but we're cooking at home more, we're buying more from the
There's growth
grocery
in the
store.
sector. The sector's growing, albeit,
Right.
the grocery sector is one of the most mature industries. We shouldn't expect that it's going to have growth like, some AI business, but it is one of the more stable, durable, and for real estate traffic generators that you can get. It's really one of the more ideal asset classes.
So before we talk about specific tenants and subsectors within grocery, let's settle on online for a moment. So online sales are still increasing, which is amazing if you think about it, right? People are spending more for online grocery delivery, and they're also spending more in store. So maybe we're eating out less. I don't know what the counterpart to that is, but for online, I think we're at roughly 17% of total grocery spend, which we both think is high, right? That's actually
Yeah.
feels pretty high. but we're at 17% of total grocery spend. And did I hear you say you think that plateaued for now?
I think it will. I think it's going to start to plateau sooner than uh, some pundits might believe. I think unless unless the cost comes down significantly, right? There's this portion of the U.S. that will um, pay for to the time back, but then there's a significant that want value, even and value is not a function of affluence. Value makes people feel good. Like convenience is easy, but it doesn't have the same feeling that you get when you get a value. When everyone think about how you feel when you think about how you feel when you got a good deal on a product versus a bad deal on a product. And when you feel like you've gotten real value, you feel so much better.
It's so true. I drink a good amount of kombucha, really specific item, and I know how much it is at each store. And if it's $2.99 versus $4.29, it makes me really happy. It's just
There
the
you go.
small pleasures in life. I'm like, well, now I need to buy 8 instead of 2 because it's such a good deal. So you're exactly right. There is that moment of this is great, this is worth it, and I'm doing something good. So I think there is a lot to that. It's kind of
Yeah.
funny when you break it down, but it's true.
Yeah, for sure.
Let's move into grocery real estate. So what are some of the trends you've seen, some of the tenants that are expanding, and what does this look like from the landlord side?
I think the first thing that you've seen is, you know, uh, grocery stores are on a, pretty steady cadence of reinvestment into their stores. It costs a lot to build a brand new grocery store, cost a lot to remodel a grocery store. And these are extremely valuable assets, these pieces of real estate. So much dollars from a revenue perspective flow out of these stores, and retailers are looking to continue to grow that and protect what they already have. And there's a lot of reinvestment going into grocery stores. Grocery stores know that they need to, both be defensive and offensive with their capex spend, and they're doing that. So that's the first part. The second
Hold on,
piece
I
is,
have it. Hold on, I have a quick
yeah.
question on that before you move on. Is there usually a landlord contribution component to that CapEx, or is that strictly a tenant cost? You said every 7 years they do a full renovation. That's big money. So do landlords typically get tapped on the shoulder or no?
So I'd say in general, every 7 years they touch the store from a significant perspective. That's not necessarily a full renovation in the way that you think about a full renovation. Um, they're remodeling. It might be decor, walls, fresh coat of paint, some new fixtures. It doesn't necessarily mean that we're moving coolers to this side of the store and we're doing it or bringing it to the newest prototype. It means that they're reinvesting in the store and making it what the consumer in that market wants. I think so. That's the first piece. Generally speaking, I think majority of grocery remodels do not have a landlord contribution. They may on a lease action, but majority do not.
Got it. Got it. So it sounds like a huge win for the landlord that you have not only a tenant that is a tremendous traffic driver to your center, but they are constantly reinvesting in their stores, improving it at their cost. I mean, that's what every landlord wants, right?
Yeah,
It's
I would
a
say the
1-2.
burden though is the fact that when grocers do that, they do put pressure on landlords to reinvest in the other parts of the asset. So common areas, things like that.
So what happens when a grocer leaves? Right? This is a unique asset type. We call it grocery anchored retail for a reason because it is all about the grocer literally creating the demand drivers for that center. It's not like a power center where you have a huge diversity of tenants, right? You may have diversity, but really the driver and the anchor, it's in the name. It's the grocery store. So what happens if a grocery store decides to close or leave? What's your first thought as a landlord?
I think the first thing is it usually the market matters, right? There are grocery backfill replacements, right? When A&P filed bankruptcy, there were people lined up buying those leases, right? The ShopRite just bought Morton Williams, Kroger was and Albertsons were trying to merge. There are opportunities to backfill. I would say it's very market specific. And generally speaking, if you want to keep it a grocery store, and many of those grocery stores are unique and heavy capex, it is a much more complicated, potentially longer lead time to lease up to another grocer. If you make the determination that the market has shifted and it's no longer a grocery anchored center, then I think then you're probably thinking about, okay, how do I maximize NOI because my cap rate on this is probably moved. And the way to mitigate that is from an NOI perspective.
It's a complete asset reset at that point, right?
At
If
that
you're
point, yeah.
subdividing the box and you're looking at new traffic drivers, I mean, it's just a complete reset. Could be okay in the end, like you just mentioned, if you can increase NOI, but definitely a trickier situation.
Yeah,
If we were to come up with a negative.
yeah, I think and it's right, it's market specific. Certain markets, like we sit in the New York metro market where the amount of unique grocers is significant. There's many in different size ranges, different offerings, specialty, high-end, discount. There's many. In certain markets, there's like only one or two grocery store chains, and it could feel like an opportunity because now there's a legitimate food desert in that market. However, if nobody has infrastructure in that market to deploy capital and open up a new grocery store, it could be challenging in that specific market to find who their replacement might be.
That's a great point. Could be a tremendous opportunity or really a significant challenge based on the market and the capital that's flowing there from the tenant side. Really good point. That kind of flows into our next topic, which is the rise of specialty grocers. You alluded briefly to the fact that in our area, we have this plethora of unique grocery store concepts, which is true. All different square footage sides, different target markets, different specialties aside from your main chains. So do you think that is a trend that's unique to the New York area, or do you see this spreading farther west across the country?
I don't think it's just west, it's north and south as well, right? Like we take H Mart. H Mart is growing across, in multiple markets in the country. They if you've been to H Mart locally, it's a phenomenal Asian ethnicity curated store. And as the United States has become more diverse, they have a core customer as well as, just people who are getting more educated on the cuisine and the types of things. And there are some traditional American items in the store. There's a blend and it's really resonated. Some of the sales volumes are extraordinary. We have Uncle Giuseppe's right here, who's also expanding. They're looking for more locations. We have, the traditional, I think what most people think of these traditional specialty grocery stores, which are like these smaller, more unique, less, call it traditional CPG products in the store, more fresh items such as Sprouts and Trader Joe's that have been taking off over the last few years. But in every market, there are these regional operators, right? Plum Market's a unique higher end brand that started in Michigan and is now opening in a lot of different places. Everywhere you look in every market, there's new types of specialty, whether it's ethnically diverse, whether it is some type of really focus on fresh. And, they are really winning on the diversity of the product offering, a lot of prepared foods that's a huge in those stores. A lot of fresh, even in the big ethnically diverse. I think fresh means different things to different people. Like if you go to Uncle Giuseppe's, you could see the super sod hanging from the ropes at times, right? The strings in the back of the butcher, right? You're not going to see that at your normal traditional grocery store. And there's in some places, in some markets, the cost of like having that really full-blown butcher doesn't yield results. But in some of these specialty, it's actually where they create margin, because that customer is really looking for that versus just the value $8.99 packaged, flank steak. And so the specialty grocers are taking off. They've been taking off. I feel like they're having a moment, because specialty grocer to me is no longer this like one thing. There's these ethnically diverse grocers. There's these fresh concepts. There's the value-oriented ones, which Aldi and Lidl, and we have a lot of different ones.
It's interesting. In a sector that is so mature and so built out and established, we are still finding ways to innovate, open new concepts, get more spend from consumers when, it really seems like we're pretty saturated, but not the case. For the
I think
specialty grocers, I think of local businesses, right? Mom and pop businesses have been doing it forever and serving these communities. What's really interesting to me is these are, in the cases you mentioned, national chains, right? We're taking something that was a very local business, a very specialty serving a specific community, and we're making it a replicable business model and bringing it to new communities, right? And we're getting some of that spend for people that maybe are exploring new cuisines. As you said, we're becoming more diverse and more culturally integrated. And I think that the way we shop is changing because of that. I personally love going into these stores. I'm not doing my everyday shopping there, but it's fun to get the specialty items and try different things. And we have so many in our area that it does become part of my shopping routine, but not my everyday go-to store.
The grocery customer is super competitive because it's a highly sought after customer, right? This is why, and I'll lead us into the next topic, why Amazon wanted to get in so badly into the general grocery space, right? They bought Whole Foods, and that put them into the more affluent grocery shopper space, but the more mass market grocery they were looking to get into. You go, why? Well, because the margins are tough and it's very competitive and people are brand loyal, and there's a lot of like scale and different types of logistics and understanding shrink when you're dealing with fresh. Why would they take all these risks? Well, that's how powerful the grocery customer is. The frequency of trip, the amount they go in, the data that they're getting because of their learning, their buying habits, what else they could put in front of that customer. That's why they made such a yeoman's effort to try and get that customer.
But you didn't miss the headline, right? That they're closing all of their Amazon Fresh stores. I just want to make sure.
I think that leads in is, I think that's right. In general, Amazon, does this often where they invest in locations, or when they invest in an idea that they have a business opportunity, and they fail fast if it doesn't work, right? Now, this feels a little slower than fail fast because the build up to get there took a long time, but it clearly wasn't yielding. The short-term economics weren't worth the lifetime value of the customer. And so they, clearly is, my take of it. And that's why they cut bait, and the short-term economics are hard, right? They're going against these, proven brick and mortar concepts. And I think the challenge was, I think Amazon has some, chose some good real estate, but I think that, one of the challenges is I think the grocery customer, and thinking about what was the really differentiator of Amazon. And I think for the grocery customer and the person who's going 3 times a week, it clearly, the tech wasn't it. The tech wasn't it. And then you come to like, Is it, certain people have affinity to private labels. We all know the Costco and Kirkland's and all that. Is it that for Amazon? Can they sink their teeth in that? Is it the diversity of the fresh and prepared foods? Is it the experience and the service, right? We hear this all the time about Publix, that they drive margins because of the consumer experience and the service they provide. So I think it was the differentiating factor. And then I think when you're doing, like, if you think about mass market grocery stores versus specialty, let's put Whole Foods into this different class of specialty. It's a scaled up specialty grocery store. Same with Sprouts and Trader Joe's.
You're talking about Stop and Shop, ShopRite.
But if you took the
Publix.
mass market traditional grocery store, if you look at what's been tried and true, it has been geographic expansion, not through a regular geographic expansion. We start in one market. Once we build that, we move to the adjacent market. Versus what Whole Foods did is say, like, our consumers in these top 50 MSAs, they don't touch each other, right? That's not how mass market grocery has typically worked. That's why there are so many different brands in mass market grocery, because at some point that brand can't break through to where that other brand has an actual foothold. And in some markets, right, some grocery stores are legendary and nobody can break into them because they're just unbelievable, right? I think Publix is a great example of Florida, right? It's very hard for a mass market traditional grocery store to come in to Florida and compete with Publix based on all the loyalty. Forget about the real estate, which is great real estate they have. But if you just think about the loyalty and the generations of brand recognition they have, it's very hard. Even because we're in this space, we might know some, King Soopers in Denver, unbelievable grocer. Ralph's in California, unbelievable grocer. But if they just said, Ralph said to themselves, our customer is a lot like the Publix customer in Florida. Let's go to Florida.
Go open up. Right.
I think that's
not
a tough
work.
putt for mass market. And that's how Amazon's expansion was. And so I wonder if they would have just chosen a market and expanded geographically, what that would have looked like. I don't think it would have served their needs. I think it's hard to run a mass market grocery chain just like a specialty chain. And then you couple in the whole, the logistics of a grocery store are very different than the logistics for warehousing and shrink and store operations and service. And these things make it complicated.
And I think to your point, they were lacking the value differentiator, and they tried the just walk out technology. Like, this is what was missing in grocery shopping. And it turns out that really wasn't that big of a pain point for consumers, the actual checkout process. So I don't think that resonated. It wasn't the time saver. It wasn't the draw that they hoped. When you take that away, why are you going there? What is the differentiator? And I think you nailed it when you started out by saying they needed that value proposition. They can't just compete with nothing that pulls the consumer in. I also think, however, they could have made it great if they needed to or wanted to, but they didn't have to because they were learning so much through the Whole Foods acquisition. When they first bought Whole Foods, my first thought was, give them 5 years, they're going to spin this off. And then they were starting Amazon Fresh at the same time. Turns out it was the opposite, right? But I always felt they don't need both companies. Even though they were under one brand, of course. And I think they found Whole Foods was working. They already had the consumer data. They had established brands. They can grow the brand, but also weave in the Amazon returns, the private label products, and slowly start getting that consumer more attached to Amazon, that they were then reaching through the Whole Foods name. And Amazon Fresh just didn't have that. It didn't have that reach. It didn't have the stickiness of the consumer. And they frankly just don't need both. They've figured out grocery through Whole Foods. And I think really what we're going to learn is where they go from here. Is it more online from Whole Foods stores, which I know they're starting to push out? Is it a different grocery concept? But they know what they need to know to be dominant. I just don't know where they go next.
Sure. I'm sure they learned a bunch. I think in the short term for the grocery space, it probably puts some pressure off of the traditional mass market grocery stores. And I think that, I think the real estate itself, while typically in a size range that's a little unique right now, that 40-ish to 50-ish
Right.
thousand feet, I think the real estate they chose was good. It's not traditional grocery real estate. That's not what they chose. That's another thing that I think was unique, right? They went into
I
like
agree.
these regional trade areas, which is a very Whole Foods model versus like neighborhood grocery anchored center type real estate. So, and listen, this isn't a knock on them. This is just how hard it is. And I think a coup to the current physical brick and mortar grocery operators who are, you know, doing really well right now.
Exactly. And I think that's really the message. This isn't a negative when we see this headline that Amazon is closing, Amazon Fresh. It's really points to the strength of the grocery sector already and the diversity and quality of tenants that we have there.
Correct.
All right. That's a wrap. Thank you so much, Chris.
Thank you.
And to everyone listening, that was this month's episode of What's in Store with Carly and Chris. We're so happy you tuned in, and we look forward to seeing you again very soon. Have a great day, everyone.
Bye.